Hello traders, and welcome back to Explain the Charts. Today we're taking a look at the GBPUSD, which has been in a somewhat tight range over the past few weeks. While there have been some moves up and down, nothing too dramatic has happened recently. Let's start with the big picture, the daily chart. Looking at the daily chart, we can see the price is currently trading above the 200-day moving average, which is a key level to watch for. This is generally considered a bullish sign, as it suggests the price is finding support from the longer-term trend. However, the daily chart also shows a bit of a downward trend in recent weeks. The price has been making lower highs and lower lows, which is a bearish sign. While the price is above the 200-day moving average, it's getting closer to that level, which could be a level where the bulls start losing some steam. Now, let's switch to the 1-hour chart and see if we can get a better idea of what the immediate future holds. Okay, on the 1-hour chart, we can see the price has been consolidating in a relatively narrow range. It's been bouncing between a support level around 1.308 and a resistance level around 1.312. There are signs of a possible bullish breakout, but we need to see some strong volume to confirm it. If we get a strong volume spike and a break above 1.312, then the price could head up towards the psychological resistance level of 1.32. But until we see that breakout, it's important to be cautious. Let's zoom in a bit on the 15-minute chart and see if there are any more clues about the short-term direction. The 15-minute chart shows a similar pattern to the 1-hour chart, with the price trading in a tight range. There are some indicators that suggest a potential upward move, but the lack of strong volume raises concerns. If we see a break above 1.312 on the 15-minute chart with a good volume spike, it could be a strong signal to go long. However, if the price fails to break above 1.312 and starts falling back towards 1.308, it could be a signal to go short. To summarize, the news and events suggest that the GBPUSD is facing some headwinds. The recent economic data from the UK hasn't been particularly strong, and the Fed's future interest rate cuts are still a source of uncertainty. This has contributed to the pair's consolidation in a tight range. The chart analysis shows a similar picture, with the price bouncing between 1.308 and 1.312. A breakout above 1.312 could see the price rise towards 1.32, while a break below 1.308 could signal a move lower. The key price levels to watch are 1.308, 1.312, and 1.32. If we see strong volume accompanying a breakout, it would be a strong indication of a change in trend. The likelihood of these price levels being reached depends on the news and events that unfold. If the UK releases some positive economic data, or the Fed's future policy becomes clearer, it could strengthen the GBP and lead to a breakout. On the other hand, if the UK economy continues to weaken, or the Fed's policy remains uncertain, it could keep the GBPUSD in a range or even push it lower. As always, it's important to manage your risk and use stop losses to protect your capital. Don't get caught up in the hype and always trade with a plan. Thank you for watching Explain the Charts, and remember to like, subscribe, and hit that notification bell for more in-depth chart analysis.